Okay, one of the biggest questions I ask people is, when you buy a stock or you buy real estate, do you know positively that that equity or that real estate is going to go up? Well, no, you really don't, because it could go down the next day and then come back up again or whatever. So it doesn't make any difference. You can look at valuations and determine whether something is more likely to go up than, like an equity or real estate or whatever is more likely to go up in one area versus another. But one thing I can tell you ahead of time is, if you know the tax laws, you know those are going to be absolute. In other words, you know you're going to end up having to pay taxes on certain investments. And depending on what it is, whether it's an IRA or whatever, if you're in the US or if you're in another country dealing with pensions. Now, one thing I'll tell you is, if you relinquish your US citizenship, you can determine your taxation so much better than if you keep it, okay? Because you can choose areas where you can make profit in a country, they don't tax you in that. Whereas if you're a US citizen, they're going to tax you on your worldwide income. So it won't make any difference whether another country doesn't tax you. The US will tax you on it, okay? So that's one of the biggest advantages of actually getting out of your US citizenship. Let me give you an example of what I'm talking about. Okay, now, if you buy properties in St. Kitts, the rental income is all income tax free. I mean, how many countries in the world can you have that? That's the big advantage. Now, you don't know what the property is going to do in St. Kitts, but one thing that's absolute, there is no income tax. That's definite. Okay, that's something that most countries are going to hit you on rental income. They're going to tax you on that. Okay, so that's one advantage about buying in St. Kitts. You know absolutely there's no income tax on that money. Also, no capital gains tax or state inheritance tax. Now, you're also going to have to look at the same thing with dividend withholding tax. Let me give you an example. If you go and you get an IRA in the US and you start investing abroad, you're going to have a withholding tax, even if that's in an IRA. If you're investing in Germany on an equity, or you go buy a Swiss stock in Switzerland, you're going to have a withholding tax in that IRA, and you're not going to be able to get that back, okay? That's the problem that you have with, you don't want to be putting stuff like that, foreign equities in IRAs like that. And a lot of people think when they go what I call offshore, they think they avoid the tax. I'm going to tell you something, in a lot of cases, you can end up paying more in taxes than you do domestically, because that withholding tax applies automatically, and that it's taken out before you get your money. So the key thing is this right here. Just like the example I gave you with the rentals, one thing is absolute, like again, is that the rental income in St. Kitts and Nevis, there is no income tax on that money. So why not go ahead and do the same thing with equities? I'm not going to tell you which equities to pick. You can get with your financial advisor on that. I'm just telling you how to lower your taxes is pick equities in countries that either don't have a withholding tax, number one, and number two is if they do have a tax on the dividend, then you would not be subject to that tax, okay? So let me kind of repeat that again. If you go and you invest in some countries, like for instance Hong Kong, Singapore, UK, if you're a foreigner, there is no withholding tax on dividends. Now, if you're a US citizen, you're still obligated to report that money, okay? I'm talking about if you have relinquished your US citizenship, this is how you control your taxes so much. You can go in areas like that and not be taxed on that money, okay? And there are other countries too that don't have, there's approximately 21 countries in the world that don't have a withholding tax on dividends. And also you can go to countries that do have a tax on dividends, but the way to get around that is stick with equities where everything is capital appreciation and they don't pay a dividend, okay? Let me give you an example. Like in the US, there's certain stocks and I'm not advising you to buy these, I'm just telling you this is what you can look for. is Facebook, for instance, Google, Amazon. You know, these are just some of the few companies that don't have, they don't pay a dividend. So everything is a capital appreciation. So if the country you're living in, let's say you've relinquished your U.S. citizenship and you're going and buying in the U.S., that capital appreciation, the U.S. government does not, and it's not just the U.S., but most countries in the world, I don't know of any country that taxes a capital gains tax on for foreigners when they sell it if they don't reside in that country. Now, if you're a U.S. citizen, you're living outside the U.S., you're still subject to the capital gains tax. If you relinquish, it's different, okay? If you relinquish your U.S. citizenship. But you're still going to have taxes on the dividends, around 30% roughly. So if you want to get around that, you stick with equities that don't pay a dividend. These are ways that you go about doing it, just like I gave you an example with real estate. You know what floors me is how people will leave the U.S. They'll go to another place, they'll buy tons of rentals like Panama, and then Panama has an income tax on rental income. And I'm thinking, why did you do that? You just did what you were doing before. You know, if you're going to be relinquished your new U.S. citizenship, sit down and figure out, you know, how you're going to get your taxes close to zero, and pick countries where you won't have that. If you like rental, if you like buying real estate, St. Kitts is a real good place because, like I said, it's one of the few places in the world that don't have an income tax, even on rental income. So if you're wanting to do that with real estate, this is a great place to go. If you're looking at buying equities, then I just gave you an example before. There are certain absolutes, and absolutes are taxes. Those are things that you know are going to come about. What the investment's going to do, you don't know, okay? But that's why I would advise people to try to stick with absolutes first and then pick from there. Instead of going in, you know, I see people leave the U.S., then they'll go buy Swiss Nestle stock, which is in Switzerland. They got a 35% withholding tax. Here's a guy who's left the U.S. He goes and then he buys in Switzerland, and he's paying probably more taxes than he would in the U.S. as a withholding tax. And that's foolish, but there's a lot of people that do that. They just don't know when you leave the U.S. or you leave a high tax country like Germany or whatever, then you need to start thinking about ways of getting around that high tax. And I'm giving you absolutes that you look at first, okay, and that's the tax, and then work around from there, and I think you'll do real well. If you want to know more of this, again, go to our website, www.citizenshipquickly.com, and just ask for some help. And I would like to hear from you. If you got a question or comment, just put it below, and I look forward to talking to you in the next video. Take care.